This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. I zoomed in this 2-year note so you can see it because, again, it's such a flat line. Unless you really, blow it up, you're hard to see. You can see we were at 18 basis points just 3 weeks ago. Okay, we're down to 12. That's a 33% move. Okay? And it's a significant move. And you got all this cash flooding into all this sovereign debt with a negative yield. Well, all of a sudden you look around and you think, if I could somehow hedge my dollar risk because the dollar's going in the toilet too, at least I can get 12 basis points here. If you look across, as you can see when we were at this level last was in early August when gold and silver were at their highs of the year. But actually the low of the year is that one tail hanging down that's in early May that I mentioned earlier. That one day, I think it was a Monday, when all of a sudden Fed funds futures went negative. When the Fed had to panic, send every goon that they could out to find a microphone to tell them that they weren't thinking about negative rates. What happens if the 2-year note starts making new lows below 10.5? Maybe. We'll get a chance to find out. The main trend line, COMEX gold, is that one that we've always drawn, begins there, middle of August. You can see we blasted through there today. Now, every other time we've closed above it, beginning in the middle of October, we reversed back down the next day. Closed above it early second day of November, reversed back down the next day. Then we blasted higher immediately after the election, only gets slammed on Pfizer news. And again, everything else has gone higher since, including the tip, since November the 9th, but not gold. Riding it down, getting back above it last week, only to be smashed down last Wednesday, and now again above today. I gave you a secondary trend line. If you think a new downtrend began on November the 9th, well, there's a secondary trend line. You can see that we didn't get above it today. Do you think tomorrow is an important day? Yes, it is. And as is the reaction on Thursday. If we get smashed tomorrow and into the afternoon and break down from my new little trend line from November 9th, break through the original trend line, and break down through the 200-day at 1828. Again, we just bounced from it again last night. And then close below 1820, we got trouble. Okay? At that point, we may be looking to hope for a double bottom at 1780. On the bright side, if instead Powell gives us a little love and we are allowed to continue, just basically overrun the banks, okay? And we can break out, not only through the little trend line, continue away from the main trend line, and actually get above 1880, which is the peak from Tuesday of last week, but also where the 50-day moving average will be tomorrow, then we'll be on to something. So those are what you're going to want to watch really closely. Trust me, I'll be reiterating this stuff in the morning. Can you see again where this is a pretty important 24 hours ahead of us? Yeah, sure is. You can see this in silver too. Okay? You know how important 26 is? I've been telling you on the weekly chart, week after week. As long as we're, between 22 and 26, we're just going sideways. 50-day moving average, I've been telling you about that. We just covered that again a couple of days ago, maybe yesterday, I don't even remember. Got above the 50-day. Again, I'm looking at early November, the reaction post after the election. Big green candle took us to the 50-day on the 5th, Thursday the 5th. Friday the 6th, we briefly traded above 26, closed at like 25.90. Sunday night, we got above 26 briefly. The maximum we got above the 50-day at that point was $1.05. And then smashola. And again, the last 2 weeks, kind of got above there early last week, smashed. Well, now look at us now. And again, at 25.53, we are $1.15 above the 50-day. So even wider than we were back on the 6th and in the early hours of the 9th before the Pfizer news. It's a really important day tomorrow for silver. And then Friday on top of that. Because if silver extends, if the dollar continues to plunge and silver catches some momentum and all of a sudden the Asian day traders start grabbing onto it tonight because of where it is versus the 50-day, and we start to rally, as I told you yesterday, you could go from 26 to 30 like really fast. Really fast. And finishing the year at 30 versus 24 or 25, I mean, that changes everything, doesn't it? Wouldn't that change your opinion of this year? I mean, not that there's anything wrong with 24 or 25 coming from 18. But man, if we can get going from here and get above 26, things could really generate some momentum. What would do it? Again, a dropping dollar. All of a sudden, a dollar index that trades with an 8.
All of this extension of dollar credit just reinforces the problem. It doesn't actually solve anything. So, a lot of these arguments for my dollar strength argument are very similar to the reasons to own gold. And I think a lot of people miss that. A lot of people miss that. They think the dollar's going to go to zero. Peter Schiff is right. The dollar's going to zero and gold's going to $10,000. And you know what? That might happen. I can't rule it out. I've always said that's possible. But what I've also said is that, the rest, pretend that gold didn't exist. I mean, I know it does, and I know we all like it. But for a second, just pretend that gold doesn't exist. Right now, the system right now is designed the same way it was back when we were on a gold standard, except for the U.S. dollar is gold, right? And so the dollar underlies the whole global monetary system. And if the whole global monetary system kind of comes under attack in the same way that gold would have risen, 100 years ago when we were on the gold standard, the dollar will rise this time because we're on a dollar standard. Now, you might think it's stupid that we're on a dollar standard. You might think it's a ridiculous notion that the rest of the world runs on dollars, but it doesn't change the fact that it does.
That it does, right?
And that's what we saw, and that's what we saw in markets, and that's what we saw in March.
Right.
And I think that's one of the most important things to kind of understand is that you can have your opinion of what you would like to see happen, but when you're investing, you should have a good understanding of what's going to happen, right? Just because you want something to happen doesn't mean that it's going to. I mean, I would love it if we were on a gold standard and that gold, backed our monetary system and that it, was priced much higher and we didn't have to worry about fiat currencies losing value. But that's not the world I live in, right? It's a nice fantasy to have. And maybe someday we'll go back there. I'm doubtful, but I can't rule it out. But in the meantime, I've got to kind of play the cards I'm dealt. And the cards I'm dealt is a fiat monetary system with the dollar backing it. Right. And for all those reasons, I think that, over the next 2 or 3 years, I think the next 2 or 3 years are going to be more chaotic, not less chaotic.
And as the week draws to a close on Friday, December 18th, we're certainly aware this has been one of the best weeks for the precious metals in quite some time, and it sets up some very interesting action as we head into the holiday week next week. Typically, this is a pretty strong time of the year for the precious metals as tax loss selling season in the mining shares begins to wrap up. And we've had 7 consecutive Januaries where gold has posted a positive return, anywhere in the line of 2 to 6%. So how we trade next week will be very interesting. We're going to keep a very close eye on silver. As we go through the day today, note that silver is holding above 26 for its highest weekly close since the middle part of September. Let's keep an eye on that level and see if we can extend these gains into next week. Hopefully you enjoy listening to these weekly podcast summaries from TF Metals Report. While you're here, please subscribe to our page and maybe even give us a like as well. And then, of course, we'd love to see you at TF Metals Report. A subscription is just 50 cents a day. And with a very interesting and compelling year ahead, I think you'll find it's money well spent. Again, thank you for listening to the TF Metals Report Weekly Highlights.